What do I think about the Brisbane property market right now?
The supply is still very, very low in a lot of these markets. It is still absolutely falling off the cliff.
Queensland is a powerhouse. Its job story is amazing.
It made sense for me to invest into this market based on my budget, based on my sort of borrowing capacity constraints.
100%. Brisbane, you can't compare it to its last 50 years. You've got to compare it to its next 50 years.
What's happening with the supply?
The Brisbane housing market is one of the most interesting in the country. In this episode, we're going to go through 15 different suburbs that you may want to keep your eye on if you're looking at Brisbane. And we're also going to touch on all the reasons why Brisbane's making a lot of sense right now and some of the reasons to be a bit careful investing there. Adi, how are you, my man?
I'm really good.
We haven't talked about Brisbane much, right?
I know. I feel weird. I feel like I'm cheating on Melbourne. Our last 17 episodes have been Melbourne suburbs. Now we're going to Brisbane? That's
what are we
crazy.
doing? Hey? Why are we
Audience
doing
is going
that?
to be like, what, Brisbane? What do you mean? So
Turn off, not Melbourne. Please stay.
Please stay.
Okay.
We need the views.
So the reason why we wanted to do this episode is because it's getting pretty obvious, and we obviously have a lot of clients that are buying in Melbourne.
Yes.
And the debate and the question is for property investors is often around diversification of portfolio within cities. So if you're going through a property plan, you're buying 4 properties, it's unlikely we're going to be saying go buy 4 properties in Melbourne. That doesn't make much sense. And there's some clients that actually prefer sticking to metro markets and have that longer term 30-year horizon in place. And then when you start doing the analysis there across different cities, Brisbane is one that makes a lot of sense. It's worth, we're going to unpack it all, but it makes a lot of sense.
It does.
Yeah. Do you get that a lot?
We do, man. Obviously, most of our conversations at the moment have been centered around Brisbane, but we do have really astute, really sophisticated investors coming through to us who are buying, multiple assets at the same time. And part of our strategy call with them is, hey, let's not sort of put all your eggs in one basket, which is the Melbourne basket. Let's diversify a little bit. You have the holding costs, obviously the challenges of holding costs in the Melbourne market. There's land tax implications as well. So Brisbane is definitely part of the conversation with a lot of clients. And a lot of clients are actually coming to us wanting to buy in Brisbane because they're starting to see some of the sentiment shifting again over the past, fair few months. So these 14 markets is something we are sort of quite active in.
Yeah.
Obviously, most of our buys are still happening in Melbourne, but these markets are something that are, coming onto our radar again.
Yeah, for sure. I think that's part of the growth story at Delia as well. It's broadening markets. It's catering to different customers. It's being really mindful of what property investing actually is, really what Delia is about. It's about, wealth creation, not Melbourne property. You're not a Melbourne buyer's agent. Right. You're a property wealth creation company, really. So that makes a lot of sense. Now, before we get into the suburbs, we'll get there. I know in the comments, they're going to be like, just skip to minute 6 and we'll get to the suburbs.
6? We have a 12-minute preamble.
Yeah, generally. Let's put some context. What do I think about the Brisbane property market right now? So when you look at the economic darling of Australia, I look at Brisbane and I see a lot of very, very positive ticks. In fact, we may do another YouTube video separately about where each economy sits right now. We've done a few of these and which job markets are performing really well. But that's the key. Jobs, jobs, jobs. It's actually the opposite story of the Australian story right now. The Australian story is unemployment's rising and job creation's coming down a little bit. And there's probably some fears around job losses in and around different parts of Australia at the moment, particularly in certain sectors, the services sector, and some of that might be AI related or attached to the financial services sector. But Queensland is a powerhouse. Its job story is amazing. You're going to like some of these statistics I've got for you.
Sure.
So, employment growth is 3.3% in Brisbane. So I'm looking at different pockets of Brisbane here, not the whole Queensland. Queensland's employment growth is 3%, really, really strong as well. In Australia, it's about 1.8. So the Australian employment growth story is weighted heavily towards Queensland. This is a bit different to Melbourne, actually. So when you go through the Victorian economy, you have different reasons to be buying in Victoria right now. But the underlying economy, which drives housing demand and all of the real fundamental reasons, Queensland is very, very positive. job creation leads to housing demand over time. It also leads to population growth, and it's the starting point of everything when an economy is moving. So you've got job creation, really, really positive. You also have unemployment rates down, not up, over the course of the year. The national unemployment rate has gone up a fair bit over the course of the last 12, 18 months. Brisbane's gone down. So it's not job losses in Brisbane that's driving it. It's over the last 12 months. And this is a bit technical, but what's actually happening in Brisbane is the employment market's so strong, job creation is so strong that more and more people who are idle are actually deciding, I want to participate in the economy too. So sometimes you have unemployment go down because people just be like, no, I'm not even going to try and get a job at all. So that drives the unemployment rate down in a weird way. So you have confidence in, I can get a job. That's in the data as well. And more people are seeking a job, but they're getting them too because it's a really strong, healthy jobs market. That's pretty positive. That's such a strong statement when you're looking into a market and you see that. It's something that we're always looking for, and Brisbane's got it.
Yeah. So when you sort of look at the macro framework, I think it makes a lot of sense, right? Everything you sort of mentioned is a very healthy sign. Now, one thing I want to address is when the Brisbane conversation comes up with clients, there's a lot of conversation around, but this pocket that you're talking about has gone up 150% in 3 years or 4 years or 5 years, right? And we've actually touched on this in a different podcast where we've said, there are other agencies that are potentially, putting forward markets that have risen a lot. The sort of thing to focus on there, it's not necessarily about how much a market has risen. It's about what has happened to the underlying data shifts that sort of imply whether it's going to keep rising or not. One thing that I love about Brisbane, especially in the last few months or so, let's say last 6 months, is that the supply is still very, very low in a lot of these markets. It is still absolutely falling off the cliff. Now, a little tidbit for anyone out there, if you're looking to invest into a market and you're sort of unsure, the first thing you should be flagging is what's happening with the supply, because that's the variable that you can't actually control, right? It's dependent on the government. There's a lot of building practices that you need to go through. Demand is something that you can control, right? People can go in, you can create demand in an area. The supply is something you can't control. So what I like about some of these 14 suburbs that we're looking at, supply is very, very restricted.
Exactly what you want to see.
And the shift in demand, now obviously Brisbane has slowed down over the past, 12 months or so, versus what was happening in the sort of 2021, 2022, 2023. It has slowed down, but there is an uptick in demand again, which is really interesting to see. That's why these suburbs have now come back onto the radar. So going back to, it's gone up 150%, cool. But that shouldn't be the isolated metric that you look at when you are determining if a market is good to invest in today, all right? That's good. You've looked at that, but then check out what the underlying data is saying as well. Is the supply still low? Is there an uptick in demand? What's happening with the vacancy rates? What's happening with infrastructure? You're already saying there's a lot of activity happening in Brisbane
so much
across the board. So one of the things I would sort of encourage anyone to do is don't get hung up on single isolated metrics. That's a great way to sort of,
roll it out.
Sorry?
Yeah, if you just stick to what's the standard metric, I think a lot of data investors use this, is if it's risen more than 50 or 60% over 3 years, this is probably just a...
There's some popular courses out there that teach that as well. Like as soon as it sort of, hits that 50% mark, you're meant to disregard it. But it completely ignores some basic supply-demand fundamentals. If the supply is still low and the demand is still high, you're still going to see price increase because that's kind of the underpinning factor. So yeah, something to keep in mind.
So we're going to touch on this in a different one altogether, but the future 5 years, the next 3 to 5 years is different to the previous 5 years. And some of the changes that you're going to expect in the marketplaces is actually you may see regionals perform a little bit less relative to capitals. Now, let me unpack that a bit. Over long run horizons, broad regionals perform significantly lower than broad metro. You have that over 30, 35-year performance rates between regionals and capitals. Curtis and I have done a different podcast, a debate on that specifically, and outline different growth rates that skip my mind right now. But capitals outperform. But over the past 5 years, with the interest rate story going up, regionals have performed very, very strongly, while some of the metros dominated by Sydney and Melbourne, have performed relatively poorly as a result. Obviously, Sydney and Melbourne have more weighting there. But if you think of it, over long run horizons, if metros outperform regionals, but regionals have outperformed, it kind of means that the shift over time goes back towards metros.
Yeah.
And it makes a lot of sense, because if I frame this as an investor, is if I'm getting a 3.5% to 4% yield, compensation for the risk I take, and I purchase in Brisbane versus I'm getting a 4.5% yield to go purchase in a regional area. Mm-hmm. And the reason why it's 4.5% is because these regional areas have shot up over the past 5 years. Mm-hmm. And I'm getting 4.5%. That yield spread difference between the two, doesn't make sense anymore for you to go park your money into a regional town that has far less diversification in its economy as well. Yep. So you expect to see this spread increase again via potentially capital growth in metros going up and yields coming down in metros even further, or yields in regional areas increasing. So you expect the spread to go back up, which means metro capital growth rates are probably going to be one of the changes that you see over the next 3, 4, 5 years in the next cycle. And Brisbane's a big beneficiary of that.
I really like that. It's really good framing. I'll probably, this is more of maybe a broader sort of perspective here, is that I agree with you. Obviously, metro markets perform well, like better over 30 years. Yep. I completely agree with you. We did a podcast the other day around mindset, right? One of the things I would encourage you to do, though, it's if the choice is between a metro market, which is outside of your reach at the moment, and the other option is a regional market that is within your reach, yes, maybe over time, 30 years, it will be a underperforming asset compared to your metro sort of cousin. It's still a better option to do that
for sure
than parking your money into an offset account, which is being eaten away by inflation, right?
Yep.
So that I think I actually read a LinkedIn post today. I can't remember who the gentleman was, but it was such a simple thought. But I was like, yeah, that's so true, because we get hung up on metro and regional and whether this market will be as good as this market. But the reality is, if your budget only affords you certain price brackets and pockets of whether it's Brisbane, whether it's Victoria, it doesn't really matter. The idea is, if the fundamentals are there, you've looked into the data, the supply-demand metrics are, sort of in your favor, it is a better option. We talked about Collie the other day, right? When I was talking about my own sort of portfolio. Collie is about as remote as it gets, right? Yeah. At the time, though, it made sense for me to invest into this market based on my budget, based on my sort of borrowing capacity constraints.
100%.
And it has still outperformed. Now, if I left my Collie property for the next 30 years versus my property in, like sort of Metro Melbourne, of course my Metro Melbourne property is going to outperform it. But that's not the point. The point is, in the 3 years or 2 years that I held that property, it still outperformed the cash that would have been sitting in my bank account, right?
100%.
So I think that little nuance is important. Yes, objectively, Metro is better, right, over the long horizon. But, there are regional markets that you can invest into that will still outperform the 4% interest rate you might get on your bank account.
100%. There's so many good lessons in what you just shared there. Yeah. Investing is about you and your individual circumstances. Cool. The market, the noises there, what budgets people are buying for, what markets are going to do well, all that actually doesn't matter that much if it's not catered to your circumstances. Correct. If the Sydney $2 million plus market is going to perform the best in Australia, I don't think that's true right now, but if that's going to perform the best, it doesn't matter if your budget's $400,000. You need to be catered around your circumstances. And when we're talking about Brisbane, we're not talking about, $400,000, $500,000 budgets in the main. We're talking above that. Correct. And that's kind of the price point Brisbane's at. And it is an unaffordable city. So
it is.
We're going to touch on the main negative of buying in Brisbane right now.
Absolutely.
Its unaffordability, its affordability index is the worst in 50 years. That's an outlier. Brisbane is sitting an outlier versus itself. It's sitting long run. When you look at a chart of Brisbane, it's sitting out here in red. And I'm comparing Brisbane to Brisbane over long run history performance. It's sitting out there being like, what on earth is happening to Brisbane property prices? When you're looking for long-term data metrics, affordability is a key component to it.
Absolutely.
And if a market's sitting at its worst affordability it's ever been at, it signals a bit of a concern, and you should have that concern there. My counter to this, I've thought about this a lot, and when I think of the best place to invest over a 10-year horizon, Brisbane does pop up in my mind. It's in my thought discussion. Even with this huge monkey on its back, its affordability framework? It's because it's sitting as an outlier because it deserves to be in that status where it is at the moment. Its economy is much more diverse. It is a really strong, diverse economy now with many different sectors. And it is becoming a bit of a powerhouse over time. It's got the Olympics. It's getting a reputational structural shift. Brisbane structurally is going up here in the minds of investors and where pricing of Brisbane should be. Its land is becoming scarcer. So there's a lot of it is its most unaffordable, but you don't need to compare Brisbane of today to the last 50 years. Brisbane of today is a different city.
It is.
Maybe you need to compare it to Sydney.
Yeah.
That sounds crazy, but if you're comparing Brisbane to Sydney, it is attractive. And Sydney has reset its own sort of metrics. Sydney operates up here. Brisbane typically here, and Melbourne somewhere in and around the middle there. But Brisbane's now starting to say, hang on, Sydney, you may think you're worth to be 30% more than me, but hang on.
I'm catching up.
I'm not only catching up, I'm there. I'm going to stay there. We don't need a difference in prices anymore. Yeah. So there's that argument too. And when I look at it makes sense. I'm like, why should Brisbane be cheaper than Sydney? Just because we have thought of that over the last 50 years, but over the next 50 years,
it might be a dynamic shift. Yeah,
you can be like Brisbane. You can't compare it to its last 50 years. You got to compare it to its next 50 years. So there could be more room for growth. So when I think of that, it is a monkey on its back, but it's got a justification and it's got a reason to it. So you have to make your own call there. But it does rack my brain a little bit, being like, hey, it's got it there because at its core is its economy is so healthy. And while that's there, and I don't see any reason for that changing over a long period of time, over the next 10 years, I think it will be the healthiest performing economy. 10 years, if it's there and continues to be there, it could be an outlier even further and be like, look, Brisbane house prices are just significantly higher than everywhere else because it deserves to be so.
It's cool insight, man. Yeah, that makes sense. And I think affordability is at its worst. I agree with you. But if you sort of look at some of the pockets that, outperformed in Perth, especially, the unaffordability has gotten almost out of control in a lot of these markets, right? Armadale, you look at what's happened. Any market that moves, 100% in 3 years, obviously incomes are not keeping pace with capital growth. So of course, the affordability will be impacted. But the other takeaway, I guess, as part of this conversation is never look at something in isolation. Affordability is one aspect of, the broader sort of conversation. But when you're looking at a market, it's about weighting many different aspects of, what actually contributes to capital growth, not just in the short term, medium term, but also long term. So affordability, as important as it is, there are other metrics that you need to weigh up as well. And, if you come across a case where, supply demand is sort of heading in the wrong direction, affordability is terrible, there's hardly any infrastructure spend, that's when you start to get concerned because you're like, okay, I've looked at multiple metrics here. Everything tells me that this is not the market to be in. But when you sort of look at Brisbane as a whole, or at least some of the markets that we're looking at specifically, some of the LGAs, it's actually, it's a pretty cool story.
So there you have it. You've got our Brisbane reasons, but we began this episode saying you want the 15 suburbs. I know that. Right. Be like, yep, you could skip to this section. We're starting to get into it. Let's go through some of the areas that Elia is looking at and why we're looking at them. This would be the data of the suburbs.
Correct.
Before we go there, one more little snippet is we have always had this framework at Elia where it's just like, let's start with understanding the economics of a location first. Understand where it sits relative to all the other areas. That is so key, relative to all the other areas. It's not look at Melbourne on its own. It is look at it contextually across information all across the country and compare it and understand where it sits and why. We've gone through that and Brisbane spits out really strong signs and we've made up a justification for the affordability. We've just talked about that. The next step to that is then going through and pinpointing, right, we've picked our broader macro market. We're going through and looking for pockets where the data is suggesting or showing the supply constraints that you're really looking for and that demand profile that really showcases that these areas will outperform as well at a suburb level, which is the work that you and the team have done. And
I think if you jump on our website, that's kind of the framework that we use, right? We start at the macro level. We look at what the economic underpinnings are for like broadly for a state or, for a large sort of area. We then do the work to look at the micro factors, like what's happening at a suburb level. And then obviously there's the asset selection part as well. So you sort of put those three things together. And that's why we are, obviously able to outperform the general market. So I know we want to get into the 15 suburbs. So let's start with, I'll talk about it at an LGA level first, just so I think a lot of people would be familiar with that. And we can jump into the specific suburbs that we're looking at in those LGAs. So probably none of these will come at as too much of a surprise. There's the Moreton Bay LGA. I think we know about that one. It's the northern sort of Brisbane corridor. We have the Logan LGA as well. We're looking at the southern of Brisbane. We have Redland City LGA as well. A couple of suburbs in there. So these are sort of broadly the three LGAs that we're looking at when it sort of comes to Brisbane. And the price points that we're looking at, sort of around that 800 to 900. That allows you to sort of pick up the, the kind of blocks that you want, the 500 square meters, the general asset selection criteria that we have at Alea allows you to sort of pick up, a pretty standard stock between that 800 to 900K in some of these LGAs. So to give you an example, in Moreton Bay, we are looking at Marumba Downs, North Lakes. I think you said someone used to live there. North Lakes?
I've been to North Lakes a lot.
It's beautiful.
I was about to do a shout out to somebody. I don't think he'd be watching the podcast. He might be. When I was in Canberra, I roomed with my brother's best friend at the time, and he has a house in North Lakes. So I don't know if he still owns it, but he'd be so proud seeing us talking about it. Yeah, like, finally. In fact, we talked about it for a long time, and I was doing this work with him. We're like, I'm not so sure. He bought a house and land package there, and it was 15 years ago, and he's like, I haven't seen any growth. This makes me so sad. But now
you have to wait till September 2025 and you would have seen it.
Yeah. What's North Lakes median that you've got?
It's about 850.
Yeah, cool. Well, he bought for about 450 then. So he waited his whole time. Hopefully he didn't sell out of frustration. So I've spent a bit of time in North Lakes. It's a nice spot actually.
It's a beautiful
good, nice set and forget investor stock there. You'd probably have early 2000s homes there. You could just buy decent type yielding properties there that just take care of itself and, have a long run set and forget investment, which is what I'd call Brisbane actually. Long run set and forget, boring buy and hold investing. Exactly. Brisbane's quite good for that.
That's it, yeah. Actually, a really close friend of mine actually owned an investment property in North Lakes as well. They recently sold it, but they bought it in 2021, I think.
Keeping to the theme of this podcast, one-upping me, being like, I have more friends than you. I have more friends than you.
Julesy, you're doing the Lord's work here, man. So
cool. What else have we got there?
So yes, let's go through the rest of the list. So we said North Lakes, Marumba Downs. We have Albany Creek. It's a bit more pricey, sort of in the 900K range. We have Clontarf. I'm not pronouncing these very well. I mean, yesterday I called it Berrima for my Darwin property, but I actually don't know if it's called Berrima, to be honest. So I have no idea how to pronounce these things. So I'm just going phonetically. So if anyone's out there and they're looking at me mispronouncing these suburbs, so I apologize.
Don't worry, that happens to me a lot.
No, it does. I've heard you. Logan LGA. We have Tanamera. I'm going to say Tanamera. I'm hoping that's how you say it. Mount Warren Park. We have Hillcrest as well. Springwood, Cornubia. Daisy Hill, Redland City. We have Kapalaba.
I've been there too.
You've been there? Nice. Alexandra Hills. I really need to get out of my house more. I haven't been to any of these places.
Yeah, I owned property, a fair bit of property in Brisbane before.
Really? When were you going to tell me this?
I was in our investing journey. I don't know whether we actually bought much actually. We just studied a lot. So when I was the investor that you don't like, the analysis paralysis one, and then don't decide to do anything. When I was in my, no, it wasn't. I just didn't have money. So I was like, I want to buy this property, but my budget doesn't allow. Let's go take a look in case my budget does magically happen, which didn't magically happen at that time. So the Redlands area is a beautiful part of Brisbane. It's actually a really nice owner-occupier pocket.
It is.
And so is the Moreton Bay area, and Logan's changing a lot as well, and has changed a lot. So there's a lot of value growth that happens there as well. And these markets may get like second wind impacts where the value is so high that percentage increases that have happened over the past 10 years continue to improve. So there's a lot of like long-term growth in these markets that have happened over the past 5 years, and you could see a second coming of that growth
Absolutely.
happening again. And the data's in all of these areas suggests that that is going to happen over the next 12 months at least,
Absolutely.
because demand and supply are in imbalance in these locations.
Massively imbalanced. That's right. Yeah. I'm excited.
Is that everything? Have we covered it all?
I think we did, yeah. I think there was some Bracken Ridge and sort of Brisbane City as well, Bald Hills. Bald Hills. That's
I
fun.
like those two suburbs actually.
Yeah.
A bit. Again, been there, yeah.
Yeah, I like it.
I've spent a lot of time driving around Brisbane
Brisbane,
aimlessly being like, check out this suburb,
Yeah.
check out this suburb. And yeah, some of these locations are areas that I've definitely driven past and taken a look at.
Thanks for the invite.
Didn't know you then, man.
How's that
Is that everything? Can you help the audience again and run through all of these, just
Let's do it.
suburb by suburb? List them out for everyone.
Sure. We have North Lakes. So I'm gonna group them based on budget. Okay. So that might be more relevant for you guys. So in the sort of 850 and under budget, we've got North Lakes, and I'm talking about freestanding houses, by the way. North Lakes, Marumba Downs. We have Tanamera in Logan. We have Mount Warren Park in Logan as well. We have Hillcrest in Logan. If your budget is a little bit higher, around that's 950K, we've got Albany Creek, Clontarf, Bracken Ridge, Bald Hills, Springwood, Cornubia, Daisy Hill, Cabalaba, and Alexandra Hills. So that rounds off the 14.
Cool. I said 20. Do you have 5
You said
more?
20?
Yeah. Let's just go with 14.
Perfect.
We did a bit of false advertising there to begin with. So we've got 14, but
I think you said 15.
15.
But then it went to 20
Cool.
and now
I'm going to
it's
add
14.
Kapara to it because it's a beautiful spot, and there's different locations there as well. One more little insight we probably should have talked about this is Brisbane units have been
Yes.
the darling of different locations across the board. It's had incredible capital growth rates. It's still outperforming houses there at the moment. While if you studied the Brisbane unit story, it was horrendous between effectively 2010 when I began looking at these to 2020 in around that time period. It was like glut. That was the word used everywhere, glut of units. And now property prices have doubled in a couple of years because everyone stopped building. That is a story that I'm going to repeat out loud in this very seat, hopefully inside a couple of years. I say it with a degree of confidence in other cities that the concept of undersupply of this market is going to get bigger and bigger and bigger, and the outperformance in this market is going to be bigger and bigger and bigger. You're going to see apartments do well. It is now blatantly obvious because the demand is there and the supply is not there. It's not coming. It's not going to come. It's not going to be there, and prices almost need to rise for it to come. It's just the housing cycle happening. So if you stick to the myth, never buy units, you're going to miss out on one of the greatest opportunities that exists right now. That there's that little anecdote. And the evidence of this is simply look at Brisbane units between 2022 to 2025, and you'll see that they've doubled in value inside 3 years, and they are units. And they produce better cash flow than any odd house that you'd get there because they've got a significantly higher yield, which has compressed now. Not to say you should be buying Brisbane units now, but it's a story for other cities to take away.
Yeah. It just makes me laugh because I have heard other podcasts being very adamant about that. Never buy units.
Yeah.
Never buy apartments. I think anytime you hear sort of absolutes, I think just be mindful. Like do a little bit more research. I think Brisbane, you obviously taken us through what the price growths look like. Check out Perth. Check out what's happening with Perth. I mean, if you think about it logically, right? If a market is in a lot of demand, it's gone through a bit of a resurgence in terms of capital growth over the last 3-4 years. Affordability has gotten, difficult for a lot of owner occupiers in those markets for freestanding houses. What is logically the next step? People don't stop buying things, right? They will still buy things because the demand is still high. Logically, it goes to the next asset class. That's kind of what's happened with Brisbane. So there was a glut at some point. Affordability for freestanding houses became, unaffordable. And guess what? It's probably going to happen in Melbourne too. There are markets in Melbourne that we are quite excited about around units, townhouses, because the freestanding houses are a little bit too out of reach. So,
and I'll put my hand up if you want to know. I think our audience asks me this all the time. I've said that I'm not investing at the moment, and our goal was to pay off our own home. Now that is largely done. My next set of investments is going to be units everywhere, anywhere, everywhere, wherever I can get my hand on them. That's what I'm looking at now. I believe in it so much. And I feel like there's the opportunity to turn, we did a different podcast where Adi turned $30,000 into over $1 million inside a couple of years just through riding the wave of opportunity that existed at that point in time. I just find it a little bit harder to find marketplaces where, and you would say the same, where you can find 8% yields and data metrics that are really strong. In all of the suburbs we're looking at, I'm not so sure we can find any of them that actually meet that criteria at a really low price point that haven't grown that much. That's the opportunity of yesterday. The opportunity of tomorrow might look different to the past. So if you want to turn your 30 grand into $1 million, it's not just necessarily repeating the same formula in the past. It might be looking at a different way to do it. So that's my little tidbit. I don't want to give away too much there, just because that is an opportunity. And a lot of my mates, really successful property investors that are on my little WhatsApp channels being like, hey, what are we doing? Let's chat. The guys with like 50 plus properties, this is what they're doing too. So that little tidbit for our audience, if it's an opportunity for you, you could look into it as well. Shall we wrap it up?
I think so.
Yeah.
Sounds good.
Cool. So many little insights there. List of suburbs to buy, Brisbane market analysis, so many reasons to consider Brisbane, and a little anecdote about the Brisbane unit story to help support your investing.